So in terms of value fund, 1996, integrity score, and then of course since 2000 we began to use it. What are the challenges that you faced in terms of trying to identify companies, which may be good value, and we've in the last few years and decades we've sold out of companies which look good, but then their integrity screen score started declining. Some comments on that?
So the challenges are, so I'll just step back a little. In 96 when I first joined, it was just the newspaper articles which we read about companies and what they did, and then maybe some interaction with the management. In those days, the interaction with the management was more on financials because the data on responsibility and social issues were not there. But we could still cull out a lot of meaning out of that. And we would come back and rework and say, all this looks fine, but Subbu, this doesn't look good, or this doesn't feel good, the office doesn't feel good, this comment does not feel good, and the company is doing all these things. And that is how we began the integrity screen. And we started avoiding some companies. So that has changed. Now you have a lot of information, and as someone rightly said, a lot of misinformation also. So we need to dwell deeper. And so the experience has been very good, I would say, because it helped us avoid lot of groups, lot of companies, which when I look back over the period of years have actually closed down businesses. The companies which we identified in 96 as companies which is not worth investing, closed down over the next decade or so. So it helped us avoid companies, avoid certain bad investments. The biggest challenge remains where we think a company is good, but then they do something which doesn't sound so good. Now that's an area where it could be a mistake. The management may have made a mistake and they will tend to correct. And I have had experiences of owning such stocks where we saw the managements change, they bring back the correction or they do the correction and then things improve, and we have held those companies. But then there are some companies which refuse to even address it, answer it, and there we go ahead and sell off. There are multiple examples of that. I'm not naming it right now, but there are many examples where we can tell that we just sold off. And equally good number of examples where the board also heard. Apart from the management, we interacted with the boards, and they took a lot of corrective action, and we have actually seen the valuations of those companies go up multifold, right? So it is important. So therefore, this whole concept of integrity screen, ESG is important.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.